Hello, Stock Charts users, and welcome to this sixth video in the educational series from Go No Go Charts. My name is Tyler Wood. I'm a CMT charter holder, and as always, I am joined by Alex Cole. How you doing, my friend?
I'm very well, thanks. Ready to tie up all the loose ends.
Sounds like a plan. This final video is where we bring everything into the practical application. We've talked about a number of big picture concepts in technical analysis. Hopefully, some of these tools have helped you in your own day-to-day trading. But what we want to do is look at a top-down research process as well as our trading discipline as we think about using evidence to our advantage. So as we talked about in the very first video, quotes like this from John Henry are helpful in keeping in mind how we want to separate our trading discipline from the narratives and the emotions and the bias that we have towards markets, right? So this guy might be familiar to you if you've read the book or seen the movie Moneyball, where the Boston Red Sox decided to take a different strategy towards player selection. And they put a team together based strictly off of the statistics of those players' history. That's what we're talking about when we think about technical analysis, right? Separating the noise from what the market is actually trying to tell us. And then in terms of our human emotion, the biases that we all bring in terms of fear and greed, risk aversion, a lot of the anchoring principles and heuristics that we all fall victim to, we can separate ourselves from that by using technical tools and having an evidence-based approach, a checklist, if you will, for all of those technical conditions. Now, we also covered how technical analysis can reintroduce a lot of those same behavioral biases if we overload our chart. Too many indicators, analysis paralysis. And if there are so many squiggly lines on our chart from that robust checklist, we might be able to convince ourselves to stay with a losing trade too long or wait too long to get into a profitable opportunity of a trending security. So we want to capture all of that powerful information from these tried and true indicators developed by the innovators of technical analysis over many, many years. But we want all the computation to happen in the background so that we are free to make simple, elegant trade decisions based off of the elements on our chart. So Alex, walk us through once more. What is the complete solution from Go No Go Charts?
And it's just as you said, we want all of that information. We believe in that disciplined process of technical analysis, but we want to keep everything simple and keep price at the forefront. So it all starts with us back in video one with Go No Go trend indicator. And what we're doing there, the core concept of Go No Go charts is to take these foundational concepts of trend following and blend them together, like you said, behind the scenes to create an indicator that color codes price based on the strength of the trend. And if you can do that, then you get all of that technical analysis that we want to help us make decisions, but we leave the focus on price. And then moving on from there, we talked about momentum and how in the same way we can take that approach of blending objective, robust momentum tools together into just one oscillator that gives us all of the information we want from momentum analysis, things like finding overbought and oversold levels, looking for divergence. And also, as an important point that we mentioned when we talk about our momentum, is how the oscillator has an objective level of support and resistance that can help us use momentum within trend, because that's one of the really valuable pieces of momentum analysis when looking at it in trends. And that leaves us then with the discussion of icons, looking at the oscillator and its interaction with that zero line, as well as its interaction with the trend indicator. We're able to highlight some important moments on our chart using visualizations so that we continue to be really focused on price. And finally, the last piece of the puzzle for us was always the idea that we wanted to get a sense of volatility, specifically reduced areas of volatility, so we can find those compressions. So we know that out of low volatility often comes high volatility. So we want to identify those areas, and we do it with the Go No Go squeeze, which of course is the climbing grid where we see that squeeze grid build for every bar that the oscillator remains at the zero line. So with trend, momentum, with volume, volatility, and of course those visualization tools using the icons, we hope to give a complete technical understanding of any asset and any security on any time frame.
So if you've been with us through these first 5 educational videos, you've probably seen a lot of big picture concepts, probably spurred you on to further readings and studies. But what we want to do today is just simplify things down to 3 questions that you can ask yourself on any security, on any time frame across all asset classes to make your trade decision. And it really comes down to these three simple questions for any chart. First, we're going to look at what the direction and strength of the trend is, right? What color is the go no go trend indicator? Then we're going to look to the go no go oscillator. Is momentum positive or negative? What's happening with the go no go oscillator and volume? And finally, we're going to look to the zero line. Anything important happening there in terms of volatility compression? That's it. So, Alex, let's walk through a few examples, starting with this chart of Caterpillar.
Yep. So right away, let's go through the questions. We always like to do these online conferences and tell everybody to play along at home. So feel free to shout it out or raise your hand if you know what we're looking for in terms of answers. But question number one, what's the trend here with Caterpillar? Well, we can see that it is a go. We are in a go trend at the moment. We can see that it is a strong go. Those bars are bright blue, right? So we're saying strong go trend. Now let's look at the oscillator. Where's the oscillator? The oscillator here is at 0. So what does that mean? Well, that means that momentum is currently neutral. And we know that the 0 line is going to be what we look for to provide support if in a go trend. So if the go trend is healthy, we will look to the oscillator and to see if it finds support at the 0 line, which it should. We aren't going to expect negative momentum if we have a strong go trend. So to summarize, 3 questions. Trend is a go. Oscillator is neutral, and it's testing the 0 line from above where we will look to see if it finds support. And we can move on to another example. I think the next one that we've got here is going to be NVIDIA. Of course, NVIDIA semiconductors, we had a really, really strong run. That go trend was in place for a long time, but things have started to change. So we can run through our 3 questions again. What's the go-no-go trend indicator saying? Well, right now, we can see that that is painting an amber bar. Now, if you think back to videos 1 and 2, we talked about how the amber bar represents uncertainty. Those are our go fish bars. Time to go fishing. There's not enough information, not enough criteria being met for the go-no-go trend indicator to paint a trend in either direction. So we are painting that bar amber, saying that there's some uncertainty. And remember, those periods can come in transitionary times between trends or in periods of sideways movement. So we aren't sure at the moment in terms of the trend. The trend is saying go fish. Where's the oscillator, though? Can that give us any clues? The oscillator is at -2. So we've got negative momentum. Is there anything interesting happening around the 0 line? Not currently, but we do see that recently it broke out of a go-no-go squeeze into negative territory. And of course, volume is heavy. Remember, volume being reflected by the color of the oscillator line itself. If it's dark blue, that tells us we're looking at relatively heavy volume. So NVIDIA, uncertain in terms of trend, negative momentum, and recently breaking down out of a go-no-go squeeze. If we move forward to another example, we're looking here at Meta. Again, another fantastically performing stock of the last several months. So let's go through it real quick. What's the trend? The trend, as you can see, is painting aqua blue bars. So that's a go trend, but it is weaker. We're seeing that we've come off those recent highs and we've been painting a string of weaker aqua bars. If we look to the oscillator, where is the oscillator? It is at 0. So we know that's important already. So what's happening around the 0 line? We are riding the 0 line. The oscillator is in a max go-no-go squeeze. We see that grid has built all the way to its max. And now we're going to be very, very interested in which direction the squeeze is broken. So weak go trend, neutral momentum, looking for a breakout of a max go-no-go squeeze to either tell us we've got trend continuation or would be a cause for concern, of course, if the oscillator broke into negative territory. Let's do one more and then we'll move on in terms of concepts. But this one is Carvana. Very similar looking chart. Go trend's been in place. Weakness in the go-no-go trend indicator. You can see that it's painted aqua bars, just like we saw on Meta. But what's the difference here? Well, if you look to the oscillator, where's the oscillator? The oscillator is in negative territory. We can see that it's at -2. So we're seeing in the price panel, we're in a go trend, although it's weak, but we're getting negative momentum while in that go trend. So that's more of a cause for concern than where we were looking at Meta on the slide before, still testing the 0 line. So if we sum this one up, we're saying go trend still in place, but oscillator has already broken the 0 line. We're in negative territory. And so that's going to give us a bit of a pause if we're looking at trend continuation ideas or looking to get involved with that trend. We're going to be very careful because of what we're seeing on the oscillator.
So we here at Go No Go Charts, we want to provide a complete technical viewpoint, but we're not trying to make you trade the way we trade or mimic or mirror one particular trading style. So it's important to point out with all of these three simple questions on any chart that you're looking at, you might be looking for short opportunities, in which case you're interpreting these charts very differently from a long-only biased portfolio manager. Similarly, your risk tolerance might be very different from another trader. So if you've been in a long-standing go trend, we've held the zero line, in this case for Carvana, perhaps lowering your position size, taking some off the table when that zero line gets broken into negative territory on the go, no go oscillator. Maybe those are some of your rules. Similarly, we've got clients who are trading intraday. We've got other long institutional capital managers that are looking at weekly and monthly charts for their trading signals. So just keep in mind that all of this can be done in any different trading style across all asset classes and over any time period. But now we want to move into the next section of today's video, and that is how to use Go No Go charts, not just for absolute trends on single securities, but we want to talk about the concept of relative strength, or using technical analysis to give us a comparative lens across multiple securities or asset classes or sector groups. And we'll talk through a few examples. This definition of relative strength comes from Martin Pring, who's a veteran stock charts contributor. He's an author and world-renowned technical analyst. And of course, there are many others who have built upon this concept of relative strength. Folks like Julius de Kempenaer, you might be familiar with relative rotation graphs, a very powerful data visualization for this same concept that we're going to talk about right now. But at its basic form, what we're talking about is a ratio between two securities. We're comparing one against the other. So let's take a look at a chart and walk through an example. Stylistically, you've probably heard many analysts talking about whether we want to be tilting into growth or value equities, right? So for equity investors, we're going to look at some style components. And the first step might be to just pull up a chart of growth equities and value shares. And we can just eyeball comparison between the two. Well, what I see is that growth stocks were rising right up until the COVID collapse, February and March of 2020. This is a case study looking at a historical view. And then they took off that V bottom in through 2020 and 2021 and tapered off into 2022. How about for value? Looks like a very similar chart, right? Both collapsed, both rallied off of that V bottom, and maybe a little less tapering on those value shares. But what we're going to use relative strength for is to give us a more quantifiable lens for comparing the two securities. So that looks like this. This third panel shows us the relative strength line of growth versus value. Now, what's interesting here is that the market knows knows everything that we know, knows everything that we think we know, and it knows more than what we even know that we are missing from our process. And what we see in this relative strength line is that growth began to outperform value substantially ahead of the index rolling over, ahead of that pandemic crash. So growth is leading value going into the COVID collapse and strongly outperforms. Then we see a little capitulation, right? Value shares are outperforming growth when this line is going down. We see them retake the ground and then taper off sharply. The other piece to note about relative strength or ratio charts in general is that, yes, both of these securities are going down. The S&P growth and the S&P value index were both in no-go trends or downward sloping trends during that pandemic crash. But growth outperformed value, meaning it went down less and less sharply than value shares did. That's why we see this relative strength outperformance. Now, taking the go-no-go concept a step further, it's great to see the direction, the slope of that relative strength line. But what if we were to apply the trend analysis to each of those periods in a relative strength ratio chart? Well, now let's switch over to a go-no-go chart of the exact same two securities. And this is on a weekly basis. We're looking at growth versus value. And we can see throughout the year of 2021, an underperformance of growth equities versus those value shares. We see some counter trend rally for sure, but this is in a steady no-go trend on a weekly time frame through that entire period. So from an asset allocation standpoint, we're looking for opportunities in value shares when this ratio is going down. You could also switch that up, value versus growth. That would be an upward go trend. But here recently in 2023, we have seen growth outperforming value again. That has entered a go trend and even strengthened to those blue bars on a weekly time frame. This is in a strong go trend. We can turn our eye to the go no go oscillator and see that it is at the zero line, building a go no go squeeze. So what that tells us is that growth is outperforming value so far this year over these last couple of months, but that we are in a period of decision making, right? So we've got a little tug of war on this relative strength chart, and that's going to inform us whether this breaks above or below the zero line in terms of the leading indicator of momentum studies. So, Alex, let's do a couple of relative strength charts, building on this concept of asset allocation and doing a top-down approach to our market analysis.
Yeah, absolutely. And to take that idea of growth stocks, and sort of more value or defensive stocks, we can look at utilities and technology here. Now, this is technology over utilities. And what you can see here is we've got that strong go trend again in terms of technology outperforming utilities. If you look towards the right side of that chart, then you've got this year a nice rebound in terms of outperformance of that ratio, a go trend with technology relative to utilities. So what we would then look at is the zero line again. Will it find support here? You can see the oscillator is moving quickly towards that zero line. And so we will watch to see if it finds support. If it quickly rallies, bounces back into positive territory, then we would suggest we're seeing trend continuation. So as long as that oscillator is at or above zero, that's confirming a go trend in that ratio of technology to utilities. So at the moment, definitely some strength in the technology sector relative to utilities.
And we're just using ETF proxies here, XLK over XLU. So when you're thinking about your asset allocation to the sector groups, you might compare multiple options. This is telling us risk on versus the defensive utility sector. Let's take it a step further. We could look at each of the sectors of the S&P 500 relative to a benchmark. And I'll tell you that most institutional portfolio managers are very concerned with how they are tracking against their benchmark. So if you're benchmarked to the S&P 500 index, then by nature, if you want to outperform, you need to hold those sector groups that are outperforming the benchmark. So here we're looking at the XLE, the energy sector, versus the S&P 500, the SPY ETF. And that same ratio is telling us that energy was underperforming the S&P 500 through this whole period. And just recently, in August, the sector group is outperforming the index. So we've got the last 4 weeks or so moving from weak to strong form in the go trend conditions. These are bright blue bars. And then we've got the go no go oscillator that reached up to overbought territory. It's cooled off since, and we can see that counter trend correction icon, that red arrow, telling us that perhaps price may struggle to move substantially higher in the near term. But on this relative strength basis, energy has been an outperformer to the S&P. Now, Alex, let's take it one step further because we can get down to an individual security level. It's great that we've got the energy sector outperforming, but let's take a look at two different oil companies, both within the energy sector.
Yeah, absolutely. And this is taking Valero versus Marathon. And you can see that even within the energy sector, you talked just then about getting the sector bet right. If you're benchmarked to an index and you can be in energy over the last 5-6 weeks, then that's it in itself, you'd be doing very, very well. But what if you could be in the best performing stocks within a well-performing sector? That's really then fishing where the fish are, or even fishing where the fishermen are, if you will. So we can see that Valero would be the spot to have parked your money if you were wanting to get some exposure to the energy sector. Since this is a daily chart now, so since a couple of months ago, that go trend was quite clearly identified. And you can see that since then, we've been at or above zero on the oscillator, so providing confirmation. We just recently made a slightly higher high, but we've cooled off just a touch. So we're going to look again to the bottom right and to see if the oscillator finds support at zero again. But if you remember, we've been talking about finding the right place to put the money based on asset allocation, sector rotation. But just answer the three questions, Tyler, right here. Where's the trend? The trend is a go for Valero versus Marathon. Yes, it's weakened in this last bar, but the trend is a go. Where's the oscillator? The oscillator is at 1, so it's in positive territory, still on the side of the underlying trend because the trend is a go. Is there anything important happening at the 0 line? Well, so far during this go trend, it's repeatedly found support, which confirms the movement in price. So we're going to look to that oscillator as it approaches 0 again. If it finds support, we'll get a go trend continuation green circle telling us that momentum is resurgent in the direction of the go trend, and that would give us trend continuation. So you can you can have a thesis, you can understand what's going on, or like me, you cannot understand what's happening at all. But if you answer those 3 questions, you can put yourself on the right side of the trend.
Absolutely. So to all of you stock charts users, thanks for sticking with us through this 6-part educational series. Hopefully today's lesson in relative strength gives you even more ways that you can apply your go-no-go charts across all securities, timeframes, and even ratio charts. If you have any questions for Alex or I, feel free to shoot us a note. info@gonogoCharts.com is our email address. And you can also check out our subscription research where we do that exact top-down approach to the markets, from asset class to sector groups to individual names. You'll find much more information at GoNoGoCharts.com. Until next time, take care of each other and trade them well.